Bring in show music, please.
This is Squawk Pod, and I'm CNBC producer Cameron Costa. On today's episode, sixth time is the charm? Paramount Skydance has amended its latest offer for Warner Brothers Discovery. Key investor and strategic partner Gerry Cardinale of RedBird, just minutes after the news broke.
The big concern was that Larry Ellison and his family is not money good for this transaction. And so we've come in and said that, okay, Larry will give a personal guarantee on the equity financing for this transaction, $41 billion.
Then changes afoot in the U.S. healthcare system. Former FDA Commissioner Dr. Gottlieb on vaccine schedules and on drug pricing in 2026.
Going forward, you're going to see prices in the U.S. on new launches probably come down, prices ex-U.S. go up.
Plus, the U.S. pursuing another oil tanker off the coast of Venezuela, and President Trump's top economic advisor, Kevin Hassett, weighing in on the Supreme Court's tariff ruling.
There are other mechanisms with which the White House has the ability to implement tariffs. They can. What we're talking about is how these were implemented this time.
It's Monday, December 22nd, 2025.
It almost is like, oh.
Squawk Pod begins right now.
Stand by, Joe. In 3, 2, 1. Here's Mike. Cue.
Oh, I like that new CNBC logo. I guess I missed that last week. Good morning and welcome to Squawk Box here on CNBC. I'm Joe Kernan. Said in the prompter I was Andrew Ross Sorkin. I quickly picked up on that. I know that I am not because I don't have a jacket on. Becky is off today. U.S. officials tell NBC News the Coast Guard is pursuing a sanctioned ship in international waters off the coast of Venezuela. If it's caught, it'll be the third vessel that the U.S. has intercepted in the Caribbean. On Saturday, an operation stopped the ship that the White House said was carrying sanctioned oil. And last week, President Trump ordered a blockade of sanctioned oil tankers entering and leaving Venezuela. The U.S. seized a ship called the Skipper earlier this month off the coast of Venezuela. And I'm back, Andrew, and I was my lead in being back here.
Yeah.
Let's see, I was gone for, I think, 8 or 9 days. 4 of those days I was driving. And a couple of times it was more than 10 hours per day because I went down south. So my lead to you is that gas is $2.50 a gallon everywhere I filled going down south. So I think South Carolina averaging $2.50 or so, but that was notable to me. I don't know what happens as far as affordability goes, but gasoline is cheap right now. If you are traveling, it's a lot cheaper to be able to travel, and you can still get some. You can still get some great food at a lot of the gasoline stations because you go into a Flying J's or a Pilot, or I don't know if you've done that recently. You travel a little, don't you? You got to look for charging stations, though, which is a pain in the ass trying to find those things.
I do not have to look for charging stations.
Not
I
yet.
just have to look for McDonald's. I have to look for McDonald's. That's what I'm
Did you
looking
really?
for, typically.
Because we do. That's not hard to find. If you're in the right, if you're in the right, it is unbelievable how many Mickey D's there are around.
The French fries, it's a win
they're
every
awesome.
time.
And if you can't find a McDonald's easily, suddenly you see in the distance those golden arches, and it almost is like, oh, if you've been looking for one, right? And then it appears, and there they are. What a great logo. Well, how are you? Welcome. Have you been getting along okay? I haven't watched that much. I like the new logo.
You, Joe.
When did we get the new?
We got a new logo. You can see
like
we got
it.
the logos everywhere. We got one behind me right now. I mean, they're everywhere. We got the new logo last Monday, and I'm digging the new logo because I feel like it's forward-looking. It's sort of about where we're all going. The new Versant spinoff is happening.
Also backward-looking. Because it looks like very similar. It harkens back to before we had the Peacock. Back in the when was that? I guess back in the 90s. Back in the 90s, it had I still have shirts, believe it or not, with some of those logos on it. But so it's forward-looking and backward-looking. It's nice.
Well, you've got. I'm looking only forward. I'm only looking forward. Is my hope. Always.
Right. But you can't look forward. You can't. You got to remember the past to approach the future in a good way, I think.
As long as we're not relitigating the past. But yes,
what are we going to do on this show then? Whenever you bring up, what if you bring up statism, or I'm going to bring up everything Biden did, and you're going to bring up everything that Trump's doing. I've seen you doing it on every network available to mankind, right? We're like China. Didn't you say we're like China now or something? What did you say? We're like, you've never seen anything like this? We're like China?
Oh, because you're following me now on Twitter, which I like. I appreciate
no, I'm
that.
not.
No, I made a comment last week. Somebody else, I'm sure somebody else forwarded to you. Yes, I know you can bring yourself to watch what I say on Twitter.
Right.
No, the comment I had made was just about how we have moved into some kind of form of almost like a state,
I know.
A state-sponsored
I had
capitalism kind of program.
I had a lot of thoughts on that.
Okay, well,
it's
we
weird
can talk
because
about it.
Democrats normally love socialism, except when it's seen to be coming from a Republican, and Republicans hate socialism unless the Republican president is. So the hypocrisy is still there. The only thing I would say is that looking at the way the Biden administration handled the statism with mandatory child care, mandatory DEI hiring, caps, a mandatory transition to energy that's up. All those things are bad for companies. I think that Trump, and I'm not saying it's good that the government's so involved, but at least Trump is more of a partnership to try to help capitalism and instead of trying to get in the way every step of the way. That's all. I like this brand of statism more.
I know you do. I know you do. The only point that I was trying to make was maybe a broader point, which is that in China, for example, every business decision to some degree it's not necessarily that it's funneled through President Xi, but the CEOs of every company are thinking about Xi and are thinking about sort of the regulatory framework and what the president wants and whether it will be approved of or not approved of, or be looked upon favorably or not looked upon favorably, or that they're all of those things. And that whatever that is, that's sort of in the head that every major business leader is thinking about, and they do that now of this president and this White House, that is different. I don't think under previous presidents, and now I'm even thinking of Democrats, because they thought so much about what the president wanted in any given moment.
Because it was the president was putting up obstacles to growth for corporations. Maybe if we do it that way, maybe if we do it that way, we can get to 5 or 6% GDP like China has done so typically. In fact, that's what we're going to get next year. I don't know whether you saw that, but that's what the president's press secretary says.
I think it's actually slightly different. I think that the rationale for that is more out of fear, which I think is different than before, which is to say, I think a lot of what took place with the law firms earlier in the year and the universities and the ABC and Disney and all of the different sort of corporate, the Intel, I think all of that is what makes business leaders today think about sort of being in the favor or out of the favor of the president in a way that they didn't before. And I don't think they thought about that in the context of previous presidents at this level.
Oh my God!
I think you'd agree with that.
Try to get a permit for a pipeline if you don't think people were fearful of things.
Sure.
The fear,
I think people always wanted to get approved, but I think not in the same way. I think it's a different. Philosophically, it's different. There's a level. It's not. Yes, people always wanted to get a permit to get a pipeline.
But it's well intentioned. It's like if you're not going to build things here and try and help, make America great again, then you need to be fearful. It's a different way. Instead of actually putting up impediments to corporations because they're greedy profit mongers that get tax cuts. It's a whole different rationale.
No, I think
it's a whole different rationale. And I like this, as I said, I like this much better. And maybe it's going to work.
I know you like this better. I know, and maybe it will.
But it's not perfect because I don't like trying to prop up losing companies. But at least I'd rather have a stake in it than just give it to them if they have childcare and hire union workers. I mean, that's even. And you don't think that the social media companies were afraid of the Biden administration if they were to print something about the laptop? You don't think they were afraid of companies if they were going to say something about the vaccines or the lab origins? They were petrified.
Yes, but I think in a different way.
In a bad way look, instead of a good way.
We're going to agree to disagree. President Trump's top economic advisor saying he doesn't think the Supreme Court is going to call for widespread refunds, even if justices rule against the president's tariff regime. Speaking on CBS's Face the Nation, National Economic Council Director Kevin Hassett saying that refunding tariffs would create an administrative problem.
The people who pay the tariff, if there is a refund, the people who actually paid for the good, the importer in most cases, they're the ones who'd be the first line of defense for refunding the tariff. But I really, really don't think that's going to happen. To be very complicated. And then that person would be responsible for allocating the tariff refund to the appropriate folks.
Now, the Supreme Court could rule on the president's tariffs as soon as next month. There had been an expectation, Joe, that we might have even gotten a decision. Some people were talking about last week. Some people talked about this week. I think at this point, the sense is it's off the table pre-Christmas, but perhaps we'll hear something in early January.
So many things along those lines, Andrew, that I saw. And is the deficit really down $600 billion? That's interesting to watch. I don't know are they massaging the Supreme Court? When that came out, initially, it looked like the Supreme Court was skeptical of the tariffs, but then again, there were some questions that were like, how, if you can put a trade embargo on a country, you can't put a 10% tariff on a country. There were questions about that as well, which was interesting. There's something else I was thinking about that happened. I don't know. We live in
on the tariff front, I think the question is, I think it's possible the Supreme Court can strike down parts of this on the view that you can't do it just across the board. I mean, I think that's part of the issue. But maybe you do it prospectively, meaning prospectively so that you're not getting into the refund issue is a real issue. That would re-scramble the economy. It would create all sorts of new uncertainty. So maybe if you were to, if you decided for whatever reason that you didn't think the president had the full rights to do what he did in the way that he did it, and that's the issue. It's not. You're right. There are other, and the president's talked about it, and the Treasury Secretary's talked about it. There are other mechanisms with which the White House has the ability to implement tariffs. They can. What we're talking about is how these were implemented this time.
Investor Bill Ackman, one in the center, not me, wants to help Elon Musk, or suggesting maybe that he could help SpaceX take SpaceX public. In Weekend Post on X, Ackman suggested that Musk merge SpaceX with a special type of acquisition company that Ackman's firm created. And under the plan, Ackman said that Tesla shareholders could receive so-called SPARs. Those are special purpose acquisition rights, so that they could participate in SpaceX's IPO down the road. According to Ackman, this would reward loyal Tesla shareholders with the opportunity to invest in SpaceX or with cash for their SPARs, while totally democratizing the IPO process. Reports have said that SpaceX is gearing up for a possible IPO next year. Ackman also floated the idea of certain investors in the transaction receiving rights to be able to participate in a future IPO of Musk's AI company, XAI. Andrew.
What do you think of that, Joe?
I'm not sure.
Go for it?
I'm not. I mean, just with what I read, sounds good, I guess, to have a chance to participate if you're loyal. I don't know. We can't do it.
It'd be really interesting to see what would happen. Yeah. I don't know. I think there'd be a lot of people who'd be interested, though.
Next on Squawk Pod, the latest in the battle for Warner Brothers Discovery. Paramount has updated its offering for the legacy assets, attempting to outbid Netflix. Key investor and strategic partner Gerry Cardinale of RedBird Capital took to our airwaves to make his case.
When you get off the set, are you expecting to get a phone call from somebody from the board of Warner Brothers?
It doesn't matter. We've gone directly to the shareholders. It would be great, but we've also gone directly to the shareholders, and thank God there's rule of law in this country.
Cardinell warns there won't be a seventh bid unless the sixth one has been vetted.
Like we've done through the 6 bids that we've made, we are being responsive to what their concerns are.
This is Squawk Pod Today with Joe Kernan and Andrew Ross-Sorkin.
We do have some breaking news that we need to tell you about. Literally crossing the tape as we speak, Paramount Skydance amending its $30 per share all-cash offer for Warner Brothers Discovery in response to WBD's concerns about the bid. Paramount still offering to buy 100% of the outstanding shares of WBD and assume all of the assets and liabilities. The per-share offer price is not changing. It does not appear to be, but Paramount says in response to a Warner Brothers filing and comments made by WBD's principals and advisors in some television appearances, including right here on Squawk Box, that it's now going to amend its offer in 6 different ways. And I want to walk you through what they're saying here because it's really quite interesting what they're going to do here. The first, Larry Ellison is now going to provide an irrevocable personal guarantee of $40.4 billion of the equity financing for the offer and any damage claims against Paramount. You may remember that was a big issue that the board of Warner Brothers has talked about, saying it was in this revocable trust. So Ellison now saying he will not revoke the Ellison family trust or adversely transfer its assets during the transaction. The other pieces of this, Paramount now saying it's publishing records confirming the Ellison Family Trust owns approximately 1.16 billion shares of Oracle common stock and that all material liabilities of the Ellison Family Trust are publicly disclosed. That was also an important point because WBD's board had some questions about how much money was actually in these trusts. Then Paramount now saying it's revised its agreement offers improved flexibility to WBD on debt refinancing transactions representing and an interim operating covenant. So that's another piece of this. And then Paramount also saying it plans to increase its regulatory reverse termination fee. So that fee now going to go from $5 billion to $5.8 billion. That effectively matches the fee that Netflix would pay if, in fact, the government or regulators were to block the deal. Lastly, the offer is now conditioned on WBD continuing to own 100% of its global networks businesses. And that is important because it touches upon what's going to happen if, in fact, Warner were to try to spin something out early. Gerry Cardinale is here. He's the founder and managing partner at RedBird Capital Partners, of course, a partner in Paramount Skydance. Gerry, it's great to see you this morning. And thank you for coming in to talk to us about these changes in the offer. As we mentioned, the price tag not changing, but some important details are, including perhaps most importantly, the backing of Larry Ellison and him now making this a personal guarantee as opposed to a revocable trust. Tell us about your thinking about the various parameters and different things in this new amended offer.
Well, look, you make a really good point. We've been trying to get our offer vetted since we submitted it December 4th. And, you know, this is a pretty simple thing. It's about shareholder value and it's about certainty. In fact, when we talk to Warner Brothers shareholders, they point out 2 things. 1, why is this so hard? It seems pretty straightforward. And 2, why would they go exclusive with Netflix so quickly when you see these 2 offers lined up next to each other? We still have not been able to talk about shareholder value here. We're talking about all these other things. And so what we've done in this amended filing is we've cleared the brush on all the obfuscation around the offer. And, you know, the big one that you know, has been percolating. By the way, we only found this stuff out in their 14D9 filing this past week. And so like we've done through the 6 bids that we've made, we are being responsive to what their concerns are. The big concern was that Larry Ellison and his family is not money good for this transaction. And so we've come in and said that, okay, we will give you, Larry will give a personal guarantee on the equity financing for this transaction, $41 billion. What we did when they asked us between our 5th bid and our 6th bid, they asked us to backstop. And so the Ellison family and RedBird backstopped it. And we did it through the Ellison Family Trust. The Ellison Family Trust, which has been around for close to 40 years and has been the counterparty in tens of thousands of transactions, including the Paramount Skydance deal, that is where all the assets resides. That's where, and it's got $250 billion of assets in there, anchored by 1.2 billion shares of Oracle. That's over 6 times coverage of the $40 billion in equity that we're backstopping. But that seems to be the sort of red herring that is out there and preventing our offer from getting vetted and taken seriously. So we took it off the table. It is now off the table. All right. The second thing
Gerry,
is this.
Just before you go there, one question on that front. Had they not told you? Are you suggesting prior they had never raised this as an issue in terms of the revocable trust and the guarantees?
We are still waiting to get a response on our December 4th offer. Full stop. We found out about these things in the 14D9 filing, and so that is why we went to shareholders. The shareholders own this company, and so we went to them directly because it's clear when you look at our offer and you look at Netflix's offer, our offer, just to reset the table, $30, all cash, 100% of the company, and a clear path through regulatory. The Netflix offer is you need 3D glasses to understand it. It's got Netflix stock, which is blown through the bottom of the collar, and it also has another currency, another stock that is to be issued. That is the stock of the spin-out company. And I think the chairman of the Warner board came on one of your shows last week saying that is $3 to $5 a share. I'm a math guy. All the people on our side are math guys. That's not $3 to $5 a share. It's $1 a share when you look at what they've levered it with. $15 billion of leverage on TBS, TNT, CNN, the only independent variable there is what does it trade for? For it to trade at $3 a share, you'd have to assume a 6 times multiple. Right? We're giving them the benefit of the doubt and assuming the same multiple that your Versant is trading at, which is 4.5 times. At 4.5 times, the math is the math. The EBITDA is the EBITDA. The leverage is the leverage. It's $1 a share.
Gerry, our Versant should be trading at 6. I'm sorry.
No,
I'm kidding.
We can debate on that.
Sorry to interrupt.
That's right. But the thing on the stub that's really interesting is we can't even talk about these, have not been able to talk about these issues, right? And so no one talks about, on the Warner side, no one talks about the value of the stub. But here's the interesting thing. It doesn't stop at the value of the stub. If that is over-levered, that spin-out will not be able to happen. And if that is the case, then that $15 billion of debt is going to need to be reallocated over to studio and streaming. So just for the sake of argument, let's say, Versant trades at has 1.25 times leverage, trading at 4.5 times, right? At $15 billion of debt, this spin-out is close to 4 times leverage. So let's say we take $5 billion of that debt out of the 15 and we move it over to studio and streaming. That still reduces it only to 2.5 times leverage. That's still double what Versant has. But nevertheless, just illustratively, let's say we do that. What will end up happening is that will squeeze the amount of cash that Warner Brothers shareholders get in studio and streaming, right? So what effectively will happen if you move $5 billion of debt over from the SpinCo over to studio and streaming, Warner Brothers shareholders will be effectively exchanging $2 a share in cash for $2 a share in equity in the SpinCo, which is a declining asset. That's dead on arrival. That is a disaster. And that unwinds this entire deal. You don't have to do any of that extrapolation. You don't have to deal with 2 stocks, 2 currencies, 1 to be issued, let alone, that's before we get to the regulatory risk, right? Our regulatory risk is straightforward. Our deal creates competition. The Netflix deal kills competition. Netflix buys HBO Max. It's 420 million streaming subscribers. The next number 2 is Disney Hulu at 184. No wonder the constituents in the ecosystem, talent, content creators, theatrical exhibitors, are losing their minds on this because they see the pricing power that will create, and hence they see what's coming, which is everybody in the value chain is going to get squeezed. So that is not good for
What
Hollywood.
is the rationale for Warner Brothers board and David Zaslav then? Why favor the Netflix deal? Just honestly, why? Does David want a job? He wants to keep his title. He wants to run the studio. What is the reason?
Yeah, it's a great question, and it's the question that I get from Warner Brothers shareholders. No one knows other than, look, you got to remember, our first 3 offers here got the board to put the company up for sale. So I think we were always a little bit on our back foot because they were originally spinning the companies, breaking it up. And, we came in and our offers was for 100% of the company. And I think it just got them to put the company up for sale. So we were always a little bit on the back foot. But at the end of the day, Joe, the shareholders own this company. The board doesn't own it. David Zaslav doesn't own this company. And this should be Warner Brothers shareholders are right. This should be a lot more simple than it is. It's very simple. It's shareholder value and it's certainty of closing.
You said the regulatory path is clear. Is that because of the president's relationship with the Ellisons?
No, absolutely not. Look, we have a great relationship on both sides of the aisle. The relationship I focus on and that David Ellison focuses on is our relationship with the rules, okay? And the rules here are pro-competition, pro-consumer. We have, if we come together, Paramount Plus and HBO Max, you will create a 3-horse race in streaming. The North Star on this entire investment is direct-to-consumer and streaming, and we will create a 3-horse race. Netflix, our pro forma company, and Disney. That is great for the entire value chain.
Can you figure out why Netflix wants it so badly in that it doesn't help with what the future competition for Netflix is?
Look, when I see the elements in the value chain, that talent and content creators and the theatrical exhibitors, all expressing these concerns, and yet some of them are afraid to raise their head above the parapet, for fear of retribution. That suggests monopolists to me, right? And so, guys who are in this position, monopolies, they want to, kill competition. And look, that's why we have these rules. That's why we have rule of law. That's why we're going direct to the shareholders. So I can't speak for any of that. All I can speak to is the facts. And the facts, it is absolutely clear. First, at a minimum, there needs to be a vetting of these 2 offers. There needs to be a discussion on value. There's never been a discussion on value. It's been about all this other stuff. What we did today in this announcement is we took all that other stuff off the table. Not only did we address the backstop and the personal guarantee, there was an issue around the revocable trust. And so Larry has also agreed to not revoke the trust during the pendency of this transaction. He's confirmed what the assets are in the trust, anchored by the 1.2 billion Oracle shares, as well as confirming no material liabilities. We've agreed that we will embrace further flexibility in terms of interim operations between signing and closing, including in discussions with their bondholders and their banks. And we've increased our regulatory reverse termination fee from $5 billion to $5.8 billion, which matches what Netflix's was, because we have absolute conviction in our ability to get through regulatory.
Gerry, a couple questions. One on the regulatory side, there is a question about, given the investor mix and a number of Middle Eastern firms that will be backing this bid, whether CFIUS would ultimately look at it and whether that represents a hurdle. What is your analysis there?
Our analysis is no, we're backstopping it. The Ellison family and RedBird's backstopping it. So all of those guys could go away, and we're still moving forward with this transaction. We also the Ellison family and RedBird will be the largest economic owner of the pro forma business. That is the way it is now, and we control the governance. So when you look at all of that, this is very much the way we set up Paramount Skydance. The great thing about the Ellison family, this is the first time since Walt Disney that you've seen a family own, control, and be the largest economic owner of one of the majors in Hollywood. That is a great thing. That is back to the future. That's what we need to see more of. That is full alignment with the shareholders. How much does David Zaslav and Reed Hastings and Ted Sarandos own of their respective companies?
Let me ask you a different question. Actually, you know what? We have some tape from DiPiazza, who's on the board, obviously, ran this for Warner Brothers Discovery. I wanted to show you what he had to say last week, and then maybe we come back.
When Paramount showed up, it became an active process. What is said on your show, you had David Ellison here, what's said there, what's said in the Wall Street Journal are nice to hear. What's important is what's on the paper. And now I think, given our release this morning, our investors can look and see, why did we decide that we were not confident that one of the richest people in the world would be there at closing? And doing a deal is great. Closing a deal is better.
So, Gerry, you heard what he said. This is obviously trying to answer those questions. My question to you is, without raising your bid at this point, are you trying to create a new conversation with the company? Do you think that this will create that conversation? Or is this really more for the shareholders longer term, for them to make their own decision? I imagine what you'd hope is that the board reevaluates this and obviously goes with your bid. But clearly, if you look at where the shares are right now, there's still an expectation that you're going to come back with a higher offer.
Yeah, look, I'm not going to put a seventh offer in when our sixth offer hasn't been vetted. And when you look at these two offers next to each other, our offer is superior, both in terms of value and in terms of certainty of closing. So, all we did today was we took all of this other stuff off the table that they've been throwing, all these obstacles that have been thrown in our way, so that we can finally get a proper vetting and hearing about our offer. No one to date, first of all, no one's talked to us. Secondly, no one's talked about value. It's all this other stuff. So we took all this other stuff off the table. We didn't think we needed to. I think it's, the way we structured this deal with equity commitment papers, with, a guarantee from the trust that holds all of the family's assets, that's standard stuff. I mean, this would never happen in any other deal. For some reason, it's happened here. So we've addressed all their concerns. We've done it through 6 offers. We have a great track record through this whole process. When we started at $19 a share with cash and stock. We've ended at $30 a share, 100% cash, and for the entire company. So we've shown that we will consistently respond to any concerns and issues all throughout the process. For some reason, they short-circuited it after the 5th offer and didn't respond to our 6th offer, so we went to the shareholders. So at this point, I think the question still is on the table. Show us where our offer at $30 a share, 100% cash, with our regulatory profile, show us where that is inferior to what the other proposal on the table. The reality is it's superior.
So when you get off the set, are you expecting to get a phone call from somebody from the board of Warner Brothers?
It doesn't matter. We've gone directly to the shareholders. It would be great, but we've also gone directly to the shareholders, and thank God there's rule of law in this country.
Gerry, do you think that, Andrew, I got to get to my Barry Weiss. 60 Minutes, they canceled. I got
to get to Barry Weiss, too. We got to talk about that.
They canceled this. I saw that El Salvador prison on the world's toughest prisons. I didn't need to see the new piece on it. I've seen it. I don't think it's Trump's prison. But don't you think there's a perception? The people at CNN, for them to prefer a Netflix deal tells you how scared they are of the new, marching orders supposedly coming.
Well, that's not what I've heard. What I've heard is people at CNN are worried about having $15 billion of debt dragging them down in a declining asset. Yeah.
When the president says CNN's got to go either way, what do you make?
Look, that's noise. Honestly, Joe, at this point, we're still trying to get to first base on this deal, right? And this is about shareholder value. It really is.
I can remember trying to do that too back in high school. Andrew, what did you want to ask about Barry Weiss?
Well, I think we should just ask Gerry straight up actually about this, because it's obviously it's the other big news story of the morning, which is 60 Minutes pulling back on this story about the prison in El Salvador, and the correspondent who pursued that story saying that the piece had been vetted multiple times and then was killed at the last minute. She says, in my view, pulling it now after every rigorous internal check has been met is not an editorial decision. It is a political one. So the question for Gerry is, to the extent he knows, was there any communication between either David Ellison or anybody in the management of the company that's thinking about this transaction, which of course will be in front of the president, and Barry Weiss or anybody inside of 60 Minutes?
Listen, Andrew, I'd say this absolutely with conviction, and I don't know about this situation, but I'll tell you this: no one is going to question Barry Weiss on being a fighter for independent journalism, right? And so her track record speaks for itself. David Ellison's track record speaks for itself. So absolutely, there's no way. And I know this makes a lot of headlines, and everybody likes to conjecture. The one thing I know, and I know both of them extremely well, is that nobody's going to fight for journalism more than Barry Weiss and David Ellison.
It's not Trump's prison, Andrew. It's not his prison. You can't blame him for the prison conditions although you'd like to, in El Salvador. Can you?
No, I'm not. The rationale of the piece, of
I've
course,
seen
was that
I've seen it on
the
some.
president was sending people, obviously, who were hopefully illegal
immigrants
to
from
this
Venezuela.
prison.
Exactly.
To this prison, and that's what the piece,
that's why
I
he
imagine,
won,
was about.
That's why he got elected and won all 7 swing states, because he said he was going to do that.
This is a debate for another day. Gerry, we want to thank you for joining us this morning. It is fascinating. We hope that you'll come on back and follow your progress. In terms of just the next steps, though, how do you think this plays out, just as we're sort of thinking about the calendar?
Well, we have a January 8th deadline for our tender. And so, we're going to be working through the holidays and into the first week of January to communicate the merits of our offer to shareholders. And we would like to see the board's free to engage with us between now and then. And if they don't, then as I said, we'll go straight to shareholders and we'll see how we do on January 8th. And we can continue to extend the deadline until we get a full vetting amongst all the shareholders.
Okay. Gerry, I want to wish you a Merry Christmas, Happy Holidays. It sounds like your holidays may be a working holiday, but we appreciate it. And we appreciate you being with us, especially right as this news was breaking this morning. Talk to you soon.
Money never sleeps, Bill.
Tease will be next.
Coming up on Squawk Pod, Health and Human Services Secretary Robert F. Kennedy Jr. is reportedly looking toward the Danish model for vaccines here in the U.S. That system recommends only 10 of the 17 shots currently on the American list. Former FDA Commissioner Dr. Gottlieb weighs in right after this.
They have a much different healthcare system than us. They have paid sick leave. They have universal health care. But they also accept a higher rate of hospitalization and deaths, quite frankly.
You're listening to Squawk Pod.
You're watching Squawk Box on CNBC. I'm Joe Kernan, along with Andrew Ross Sorkin. Becky is off today. Health and Human Services Secretary Robert F. Kennedy Jr. said to be pushing for a change to childhood vaccinations. Secretary Kennedy is looking at the Danish system, which recommends only 10 of the 17 shots on the U.S. list. Joining us now, former FDA Commissioner Dr. Gottlieb. He serves on the boards of Illumina, Pfizer, and United Health. He is also a CNBC contributor. Good morning, Dr. Gottlieb. Good to have you on.
Good morning.
What do you think of this? I would. When you talk about stimulating the immune system, there are obviously great benefits to be able to do that in terms of these herd diseases that we basically have eradicated. Then again, I can see how, in a perfect world, if they were gone, I'd rather not be introducing antigens, foreign things into my body or my kid's body if I didn't have to. Does this make sense the way Denmark does it?
Well, look, they make a decision to accept preventable hospitalizations in the pediatric population. They have a much different healthcare system than us. They have paid sick leave. They have universal health care. But they also accept a higher rate of hospitalization and deaths, quite frankly, on a per capita basis. They don't vaccinate for flu, hepatitis B, hepatitis A, rotavirus, varicella, so chickenpox, meningococcal disease, which is a devastating disease, rare but devastating, RSV prevention in children and adults. And just to put that in perspective, RSV alone, before vaccination, accounted for 60 to 80,000 pediatric hospitalizations in the United States under the age of 5, about 100 to 300 deaths annually. It was fully 10% of all hospitalizations, infant hospitalizations, were accounted for by RSV. That's dropped 70 to 85% as a result of the introduction, not of a vaccine, but an antibody drug that's used as prophylaxis and also a maternal vaccine, so a drug called Beyfortus by Sanofi. Give you another example with varicella, chickenpox. We all remember getting it. There were 100 to 200 deaths a year from varicella and about 11,000 hospitalizations. So these aren't benign diseases, and they put a big burden on the healthcare system and families and cause a lot of morbidity. They accept that in Denmark. They also have different patterns of spread among these diseases. Historically, we have not accepted that. If we go to the Danish model and we end vaccination or substantially reduce vaccination for these diseases, we're going to see them resurge, and we're going to have to build new pediatric hospitals.
So what's the scientific rationale for doing it then? Or there isn't one?
Well, look, they put forward arguments about purported causal relationships between vaccines and autism and other things. I mean, the argument is constantly shifting. Before, it was supposed to be the preservative thimerosal that was in vaccines that caused autism. Once we reformulated the vaccines at FDA, and I was there when we did it to take that preservative out, the argument shifted to the adjuvants in the vaccine. They also say that children get too many vaccines, but if you look at historically, in 1985, children were vaccinated for 7 diseases and received about 3,000 antigens. Today, they're vaccinated for 15 diseases and receive about 180 antigens, to get back to your initial point. And so you're getting protection from more diseases with fewer exposure to antigens. I think this is really about, quite frankly, liability. If they move away from recommending these vaccines and move them to a different configuration on the CDC schedule called shared clinical decision-making, there's a question of whether or not they will still have liability protection under the Vaccine Injury Compensation Program, so whether people will be able to seek compensation through the VICP, or they'll have to sue manufacturers directly. And a lot of, Secretary Kennedy's trial lawyer colleagues want to be able to sue the manufacturers directly and not have to guide parents through the Vaccine Injury Compensation Program. And in fact, they were on Twitter this weekend saying that. They were talking about a number of the people close to Kennedy on the outside who work in the trial lawyer community. We're talking about the fact that if these get moved off the recommended schedule, it will waive the liability shield that is currently in place, that was put in place to entice manufacturers back into the space. I will say this is an open question. There's arguments on both sides of this question whether or not these vaccines will still fall under the VICP. It's going to get litigated. They may have to go through rulemaking. So this is an open question, and ultimately Congress could step in and legislate, although I'm doubtful that they would.
Have studies been done on the adjuvants that you were talking about, and whether that could actually be one of the reasons for the increasing rates of autism? Because it almost looks like this is that, and the way the word science is thrown around lately, at least for me, there's plenty of science that I think is junk science. I do, but just to have a feeling, wow, there's a lot of autism, must be, maybe it's the adjuvants, it's obviously not the thimerosal, maybe it's Tylenol. It just seems sort of scattershot, and it almost seems like not science-based, and it doesn't seem like the way you want to run a healthcare system.
Yeah, look, I think the rising rates of autism, we know some of it's related to diagnosis. There's probably demographic factors at play. Older birth cohorts, people having children in the older age.
Well,
we know that there's
Scott, just thinking it might be because it coincides with the advent of a lot of vaccine usage. Just using a coincident indicator without having the double-blinded studies that take into account all the variables doesn't seem like the way you should be setting policy in the country.
Well, look, I agree with you, Joe. And there's
why don't
been
you
good
say it?
studies
Why don't more people say it then? Well, they're afraid to say it?
Well, a lot of people do say it. I think that, the people currently in control in the public health agencies don't say it, but there's been a lot of good studies. This has been one of the most exhaustively studied questions probably in modern times. And there's 4 studies that people generally point to, 2 that were done by the CDC, 2 that were done by Denmark, believe it or not. They do very good vaccine research there, looking at the question of whether or not there's a causal relationship between increasing vaccination and rising incidence of autism. And these were long, exhaustive studies, some of the largest studies done, and they didn't show a correlation between vaccination and rising incidences of autism. And the thing that a lot of the people who are opposed to vaccination, and Secretary Kennedy points to, is an adjuvant used in the vaccines called alum. We've talked about this. It's an aluminum salt, not elemental aluminum. It's an aluminum salt. It's been used since about 1930. It was introduced when, the history of the Great Depression that Andrew wrote about started. So it's been used in vaccines for a very long time. It's a safe adjuvant. It's used, as you know, as an immune booster so that you can get a better response from the antigens in the vaccine. And if you took it out, you'd have to put more antigen into the vaccine, which you wouldn't want to do. But that's what people point to now. After thimerosal was removed from the vaccines, the argument of the anti-vaxxers shifted to, well, it must be the alum then.
Well, I don't know, Tylenol, it's kind of scary, Scott. Talk about most favored drug pricing. I always worried that if we import price controls that it's going to hurt innovation. How did this all come to pass where it's like Emily Latella, never mind, it's not going to hurt innovation if we import the prices that some of these other countries have negotiated down, or I don't know, it's not even negotiated. They've capped prices.
Yeah, so look, there's under the IRA they did, but there's a lot of different elements to what the President Trump has been doing with respect to drug pricing. The latest announcement that came out on Friday was that they are putting in place mandatory rebates for certain Medicare drugs, Part B and Part D drugs, based on the price differentials between what the drugs are sold for in the U.S. and in Europe. So if the price differential is significant, if it's sold a lot less expensively in Europe versus the U.S., companies will be obligated to pay a rebate back to those programs. But it looks like the impact of this is going to be relatively muted. It's only going to affect anywhere from 5 to 10% of overall Medicare spending on drugs. There was a good note out from Raymond James this morning. Chris Meekins, who worked with me in the first Trump administration, he was working at HHS at the time, did an analysis on this. And it's probably going to have a limited impact. There's also a question of whether or not the companies that sign these MFN deals to basically cut a deal to offer mandatory rebates in the Medicaid program, whether they'll be subject to this new demonstration project that was announced on Friday. Many people think they won't. Genentech put out a press release suggesting that they think they won't be subject to this new announcement that was put out Friday. I will say, though, the most significant part of what the president announced, which I think hasn't been talked about, is that in these MFN deals he's cutting with the companies, they're agreeing to launch their new drugs at a world price. So they're agreeing that any new drug that they launch, they'll launch it for basically the same price in Europe that they sell it for in the U.S. And so going forward, you're going to see prices in the U.S. on new launches probably come down, prices ex-U.S. go up. I think that's the most significant piece of all of these deals. It's the one piece that hasn't been talked about. And final point here, they're holding on to 4 more deals with 4 additional companies. That's the speculation in Washington right now for later this week when they make an announcement about the rollout of Trump RX. This is going to be a website where people can go online, buy drugs directly at a discount, drugs that companies offer to sell there. And so they're going to announce that, and they're going to announce 4 additional MFN deals with additional companies. The president, I think, hinted that one of them was J&J. That's the speculation right now among folks in Washington.
All right. Thank you, Dr. Gottlieb. I love it. Right in the intro. Every single time, Pfizer board, every single time, and yet I hear immediately no mention of the Pfizer. It's I don't know. People have excrement in their ears, or they just don't want to hear that we disclose that you're on the board of Pfizer. They just it's part of their narrative.
And we disclose it while we're talking as well, right?
You disclose it while we're talking, but you're obviously conflicted, and we're hiding that, and we never say anything about Pfizer. Can you say it one more time? No, don't do it. I'm joking. Dr. Gottlieb, thank you. Good to have you on.
Thanks a lot.
That's the podcast for today. Thank you for tuning in, as always. Squawk Box is hosted by Joe Kernan, Becky Quick, and Andrew Ross Sorkin, weekday mornings on CNBC, starting at 6 Eastern and going all the way until 9. To get the best bits of that TV show right into your ears in a much shorter format, follow Squawk Pod wherever you're listening now. We'll meet you right back here tomorrow. Have a great day.
We are clear. Thanks, guys.